Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, January 2nd, 2015. Stocks turned somewhat volatile this couple of weeks, but the long-term trend is still firmly in place. It is up. It feels like the market is waiting for Apple to finally make its move to the upside, and I'll look at the chart of Apple. Bonds hit all-time highs again, and we'll look at where is this going. Gold and gold miners broke out to the upside and on good breadth, and I think this breakout is holding for now, and we may see higher prices in gold and gold miners. Oil may be stabilizing around $46-48, and we'll look at trading natural gas, and I think currently natural gas is very oversold and may represent a good buying opportunity. Let's look at the long-term picture of S&P 500, large cap index. So large cap stocks have been in an uptrend since at least 2009, where following the bottom in after the financial crisis. But this particular latest iteration of a bull market in stocks started in 2011. And we've pretty much gone straight up since then. So long term, the perspective has not changed, and the market is still bullish. We have a little bit of waning momentum, but other than that, I don't see a bear market just yet. I mean, we of course may roll over, but this will be like a sort of a process. It's not going to happen overnight. So let's look at a more at an hourly chart of S&P 500. So S&P 500 large cap index hourly chart. So bullish chart, I've shown this in the past. In a bullish chart, it's more profitable to buy the dips, and there was several buying opportunities. This latest iteration is working okay. It's about even right now. I'm letting this position fluctuate a little bit. You can see that the rune green is still rules, and the rune red did not make a conclusive surge to 100 yet. So I think that the bias is still bullish, and we may still see fresh new highs soon. And I do think that Apple kind of not necessarily holds the key, but it definitely would help if Apple would start moving up stronger than it's been in the past. And actually today Apple held up okay. So let's look at Apple. In the face of market decline today, Apple actually gained. So that's a good sign. Apple currently on our chart is in a sell signal since January 5th, when on December 29th there was a buy signal, but it immediately failed, and it was kind of like a whipsaw. So it was a sell signal immediately. So right now it's again kind of coming up, and once the rune surges to 100, cut conclusively here, then it'll be definitely a good time to buy Apple, and also it may signal a continuation of uptrend for the entire market as well, because Apple is a big part of the S&P 500 and of other indexes and funds as well. So we'll see how Apple goes. Bonds are hitting all-time highs again today. On Friday it gained over 1%, and I just it's been in a very steep, strong uptrend, and you can just pick a place to buy and stick to it, or you can do what I've been doing with swings. So swing up. So latest swing up happened on January 2nd, and this was quite profitable. It's already plus about 4%. Position is still open. So possibly due to deflationary fears in Europe, there is a strong bid into the bond market. And also, treasuries are moving up. So what's weird is usually treasuries and the dollar. So currently treasuries are moving up, but at the same time, gold has also been moving up. So this usually indicates some sort of a flight to safety. So treasury is a traditional safety asset, and gold also a traditional safety asset. So if this trend continues, that would subtract money from the stock market. In other words, money will be moving into other asset classes. So let's look at gold. Gold, this is a spot price, closing basis spot price, has been in a downtrend since 2011. And, what will it take to turn this Titanic around is, to me, a close above maybe around $1,400. Then once it then I would say, okay, the bear market in gold is over and we're now in a bull market. But for now, it is still in a bear market. And let's look at gold miners. And I highlighted gold miners in several in the last video as well. So gold miners were actually very strong. They broke out above this triangle resistance. And this red line right there, which is a 50-day moving average, closed above it in a strong candlestick right there and then broke above it. So, and also this resistance level from this breakdown in October. Right now things are really looking good for gold miners. So we opened the position on gold miners as well. And this, let me just refresh this screen again. So this advance, for example, here in November and here again in December, it was both failures for gold. So it closed above the 50-day moving average, immediately fell back. Same thing here, closed above the 50-day and then fell back. Here it's different. And I think the reason for that is because of the broad participation in this rally by the gold miners. You can see gold miners bullish percent index, which is a percent of stocks within the index on the point and figure chart buy signal. So on both previous rallies, rally attempts in November and December, the bullish percent index just kind of stayed right there, about 6%. But here it broke out, and now it stands at 33%. So 33% of the stocks are on the buy signal and within this index. So that's significant. Same thing for new highs, new lows indicator. You can see it turned positive, finally turned positive. It was always either neutral or negative. So this particular rally, I think, may have legs. Let's look at gold itself, more an hourly chart. So the latest buying opportunity for us was on January 6th, just a few days ago. We entered the market around here for gold as well. So we're now long gold and gold miners. And since they kind of move together, it would make sense. It would make sense to hold both of them. Let's look at oil. United States Oil Fund. I've shown this chart in the past. Right now, still very bearish, and I see no bottom in oil prices yet. The bottom in oil prices, well, let me rephrase it. At the very least, a tradable bounce in USO will happen for us if this Arun green surges above Arun red. It hasn't happened yet, so if you're short gold, short United States oil fund, then I see no reason to cover just yet. Possibly, oil has reached some sort of a support level. So this is West Texas Intermediate crude oil spot price end of day. Highlighted this chart in the past as well. So there was a steep decline, sort of like a pennant consolidation, and a breakdown of pennant, and it just collapsed lower. So at this point, there seems to be some support in the 46-47 area. You can see there's 1, 2, 3 candlesticks which look like hammers. So hammer candlesticks indicate support. It's possible it will stabilize here and just kind of go sideways. You know, I'm not saying that this is the bottom, but I probably would not be terribly short either oil at this time. So, anyways, I think that's all I want to say about the oil market at this time. So let's look at another commodity which I didn't normally cover in the past. It is natural gas. So natural gas spot price end of day. First of all, natural gas is a very volatile commodity, and trading it is quite risky. You will most likely get quite a bit of whipsaws and false signals, etc. So you have to be you have to size your positions correctly, and also be very quick to cut your losses if you're proven wrong. Here, natural gas started its latest bear market at the very least in February of 2014, but possibly even earlier when the peak happened. But in any case, according to this chart, it started in February. So we're going to have a bearish bias at this point, from here on. So let's look at United States Natural Gas Fund, UNG, which is a hourly chart. And there were several good selling opportunities within it. So for example, here. See, this one would have probably not worked out that well because it was very close to a whipsaw. So you would have had to cut your losses immediately here. And also, when I trade, I usually trade with the direction. I try not to fight the trend. So if the trend is down, then I will short. It makes more sense to short. So this particular counter trend bounce may have resulted in a very small win or possibly a break even, but so it is more dangerous to trade against a against the trend. But this latest iteration happened, resulted in about 30% gain from here to here. So it's very rewarding if you catch the move for United States Natural Gas Fund. And now let's look at the same charts, but from a very long-term perspective. So natural gas spot price. On this chart, I highlighted, this is an indicator called price momentum oscillator. And you can see that right now, United States natural gas is so oversold that it hasn't been this oversold since 2012. The readings are very negative. So what this is telling me, it's a rebound in natural gas prices is very close. It's probably just around the corner. How strong that rebound will be or where it will take us, I have no idea. But the point of the matter is that there is a possibility of a rebound, and even though currently it's in a bear market, I would actually consider entering this trade as a counter trend bounce. And let me go back to United States natural gas again. If this bottoms out, what will happen is this green rune will surge above the red rune at 100, and it will stay there for, like it will make a move to the right. At that point, it would be a good time for me to enter for a counter trend bounce. But once again, you have to be very quick to cut your losses should you be proven wrong. And it's possible, and this happens all the time. So with this, specifically this commodity, it's really volatile, so be very careful with it. All right, I think that's all I wanted to say. So just wanted to show you really quick how to connect to us. So let me just move this a little bit down. Okay, so if you go to MasterChartsTrading.com, MasterChartsTrading.com, first of all, there's a blog, and I post all of this stuff there. You can sign up for our mailing list. You can get this newsletters in the mail, in the email, and to see the charts that are highlighted in this video, go to public charts and see this, follow along on our public charts page, and all of the charts are located there. Also, if you have a Twitter or Facebook or a YouTube account, Twitter, Facebook, YouTube, or StockTwits accounts, you can follow us and sign up there as well. And all of the links are located there as well. That's it for this time. Thanks for watching, and have another great trading week.